Hello everyone, welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over a stock that is a very hyped up growth stock. They're going public today that I'm posting this video. We're talking about the Snowflake IPO. Snowflake is a stock that has had such incredible demand that they've had to raise the IPO price 30%. Now this gives it a $30+ billion valuation. I'm going to be going over the reasons why that is. We're going to be looking through the SEC.gov website, looking at Snowflake's report. We're going to be going over some of the bullet points, the main things that I wrote about this company that I thought was important. There's also an article here that has a lot of the main pieces of information that you know broken down into bullet points, which we'll be going over those as well. That will be our main focus in this video. And then last but not least, if we have any time left over, we'll also be getting to some news with some of my stocks that I own, like Store Capital raising its dividend, Carnival Cruise Lines I don't own, but I just recently covered them, and how they're offering more shares to investors, than how 3M ups their guidance for the year of 2020. So overall, guys, if you're not familiar with me, if you're not familiar with who I am, my name is Jordan. I'm the Millennial Investor. I track my annual dividend income, my monthly dividend income, my portfolio value, and even something that hardly any other YouTubers disclose. I disclose my monthly YouTube income, and there it is broken down by category. But overall, guys, if you're interested in this video and you want to support me and my channel, one of the ways that you can do that is to use this referral link that is down in the description. We have 2 more as of this morning. We are now up to 31 referrals. If you want to go ahead and support me and my channel, get this number to 32. This link will be in the description, like I said, so please go ahead and check that out, and there's lots of other things in that description as well. And what's also included in that as well is the fact that we have a link sharing all my holdings in my portfolio, which I disclose everything. Once again, I disclose my buys, my sells, my dividends, and I did just make a big deposit in case you guys didn't catch that at the cash balance. I'm about to be bumping up my portfolio by another $1,000, making a big movement over. I finally have some cash saved up. But overall, guys, these are the 29 holdings that I own, in case you just want to see them if you don't want to open up the link in the description. And there you go. There's the 29 stocks that I own. Feel free to pause it or anything like that. But overall, guys, let's go ahead and jump straight into Snowflake stock and give my opinion as to whether or not you should be buying it on the IPO day. So first off, like I mentioned at the beginning of the video, they had to raise the stock price 30%. Now, usually it's not really rare for us to see a company raise its stock price pre-IPO if there's a lot of demand and hype up behind it. Now, typically what you might see, like for example, you might see something like a 10% raise, maybe even a 15. 20 is pretty big. Now, a 30% raise pre-IPO is a massive jump up. Just think about that for a second. You're talking billions of dollars of valuation already priced in, and this stock hasn't even traded a single share yet. The original price target was between $75 and $85 a share. Now they're shooting between $100 to $110. That is an incredible jump up, and most of the reason behind this is because of this bullet point right here. Last week, Snowflake revealed in a filing that Berkshire Hathaway and Salesforce each agreed to buy $250 million worth of stock at the IPO price in a concurrent private placement. Now, one thing that I've seen a lot of people say, oh, Warren Buffett is buying Snowflake. Warren Buffett is bullish on Snowflake. That's not exactly the case. He has a ton of different fund managers that have their own portfolios that he trusts with some of the capital at Berkshire. So Warren Buffett himself is not making a bet on Snowflake, but his company is. So a lot of people get hyped up around that and get excited and immediately think that Warren Buffett is investing in it. So they immediately just say, oh my gosh, we got to jump in and buy the stock. Now the fact that they do have Salesforce backing them is a pretty powerful source. If we go back here to M1 Finance, we click Research tab here, and we type in CRM, which is Salesforce ticker symbol. They're one of the best companies out there, in my opinion. I've used them at previous jobs, believe it or not, and I really love the experience that I have as a consumer. I think it was incredible, and you can see how their share price in the last 5 years has went from $70 up to $250. So who knows as to whether or not Snowflake will experience the same kind of gains, but it is pretty awesome that they have 2 large corporations, 2 of some of the biggest companies on planet Earth, backing them up and saying that they're going to be incredible and taking a position in them. Now let's go ahead and close out this article, and let's go ahead and move towards the SEC.gov's website, and this is their report following Snowflake's IPO. Now as I scroll through here, I'm going to be showing you some charts and some information, and basically just some basic information about the company. And what I wanted to go ahead and start off with here was this front page. This is just some of the bullet points just to give you some of the reason why it's so hyped up. They have 121% revenue growth in Q2 year over year. On an annual basis from the beginning of the year, it's actually even higher than that. They have a 158% net retention rate, incredibly high. They now have over 3,000 customers, which is steadily growing every single year, and 56 of those customers spend at least $1 million on their services. They have 500 million in daily queries and then 71 NPS. So some of the bullet points that you can already see on the main page of the stock is pretty incredible. Now what we're going to do real quick is we're going to look at this chart. This is the real fun here. You look at the year over year growth, and this is not yearly reports, this 29, 37, 44. No. Look at these numbers. This is quarter 3 of 2019. This is quarter 4, quarter 1 of 2020, and on and on and on. And now this is reported and what's also expected, and you can see the growth is incredible. According to them, they see that triple-digit revenue growth is going to continue probably for multiple years out. Now, who knows whether or not they're going to be able to do that. I think they probably will be able to at the way that they're scaling things now. And generally speaking, from what I've seen, guys, just from what I've read online, I haven't used any of Snowflake's services personally, but I've read a lot of different Reddit forums and online posts, and basically the general idea of what I've had behind them on both the IT side, on the people in the backside that are developing these types of products, and then also on the consumer side, the people that are using these products inside of businesses. Both have really positive reviews about them. I saw a couple negative reviews, but for the most part, it seems that people are really backing this company as consumers, which that doesn't do anything hand in hand with the investor side, but it gives you an idea that people really do see their products legitimized as good as a lot of other people do. Now let's go ahead and scroll all the way down, a long way. We're going down all the way to page 84. And on page 84, I think this gave a pretty good idea of breaking down their business model, and I wanted to show you this because a lot of people don't even realize what exactly they do. Their business model is a little bit all over the place. These cloud companies are sometimes kind of hard to understand, and this is a very dumbed down, basic way kind of chart to where you can see what it looks like. Their core business is centralized storage, and you see these three names here. Look familiar? Google Cloud, AWS, Amazon Web Services, and then we also have Azure. Three of the top internet services in the world. These cloud storage companies are compatible with Snowflake, and that gives them, in my opinion, an incredible advantage. If you're not compatible with these three, you're already putting yourself at a massive disadvantage. So the fact that they can integrate very easily with these three gives them a huge leg up. They have their next level, which is multi-cluster compute, and then they have their top level, which is cloud services, which is optimization, management, transactions, security and governance, metadata, and sharing and collaboration. But overall, that's kind of what their business model looks like. But the bulk of the revenue is going to be coming from centralized storage from all these other cloud companies. And I'm sure that they're going to get more and more business from these three big dogs, as well as they're integrated with them very easily. Now we're going to go ahead and look at the balance sheet. Let's go ahead and look at some of the data behind this company. And let's go ahead and look at the balance sheet. It's on page F-3. So we're going to type in F-3. And by the way, anyone's welcome to look this up as well as we go through it. But if we look at their balance sheet here, they only have 2019 and 2020 numbers because they weren't a public company, so you can't go very far back. That's the one thing that sucks. And I want to go ahead and just look at their cash and cash equivalents versus some of their liabilities. I think this is really important to look at. I usually go over this with some of the main stocks I'm usually either recommend to buying or definitely even at least the stocks that I own. But let's go ahead and look at how much cash they have. They have cash and cash equivalents of $127,000 and then short-term investments of $306,000. So if you add those up together, that's about $430,000, or in this case $430 million because the numbers are in thousands. $430 million in cash and short-term investments. So quite nice there. Their total current liabilities sits at about the exact same number, $416 million. So the good news is they don't have any kind of massive debt or anything like that, and they don't even really have a lot of long-term debt that they've even been able to price in yet because they're still such a new company, but overall it doesn't look like any of the balance sheet is really anything that's crazy unhealthy. Now that we've looked at that, let's go ahead and look at some of the revenue growth. Let's see how incredible some of these numbers are. Once again, only 2019 and 2020 data because it is so short. It is so short of a timeline. They have not been public until today, so they don't have a lot of the numbers that a lot of these older companies do. But the revenue is mostly all I want to look at. I don't want to focus so much on any other numbers except for revenue and net loss, and there's a reason why. Let's look at revenue. $96 million in 2019. The next year in 2020, they reported $264 million. What an incredible jump up in revenue. well over double, almost triple the numbers in revenue, and that is some great numbers, guys. But on the flip side, they also had a pretty substantial loss as well, which about doubled the same. Their net loss was 178 million, and then in 2020 it was 348 million. So about even a double up there. So the net loss is shrinking on a revenue per loss basis, but it is still growing that net loss, which is pretty bad. If you do it on a per share and EPS basis, they are $7.77 in the red, negative EPS. So that is not very good, guys. Now, a lot of these cloud companies are growing at very rapid paces, but right now they're not really bringing in a whole lot of profit. So if profitability is an issue for you, then I would definitely recommend staying from this company. But if you're worried only about the revenue growth, this is absolutely the company for you. Now, let's go ahead and look at some of the bullet points here. Some of these bullet points I'm just going to fly through, some of the ones that I think are really important, and I think this website broke it down really good just to give you an idea of what they're looking at. They raised $450 million in growth funding, nearly doubling total funding to more than $920 million, doubled post-money valuation to $3.9 billion. This is a little bit outdated, so this is what it used to be. More than tripled revenue year over year, 257%. Some of these older numbers are still looking incredible, just like today. And then they also have some other things, like they've tripled the employee count. They're LinkedIn's 50 most sought after startups, Fortune's 50 best workplaces in technology, and so on and so on. Their product innovation I thought was really cool. And now general availability of Snowflake on Microsoft Azure. This is when they announced their integration with Microsoft Azure, which is very important. They're made available as a software as a service or a SaaS contract through AWS, Amazon Web Services. And then if we scroll down here, you see that they more than tripled the number of active customers to more than 1,400 and adding new enterprise customers, including some huge names, which include Netflix, Office Depot, DoorDash, Netgear, and Yamaha. They increased all these different categories. And let's look at their highest to lowest growth categories. They have it split up between finance, technology, retail, and healthcare, and their finance grew 281%. It's even crazy to say that number, 281%. Technology, 210%. Retail, 207, and then healthcare, 142. That's pretty impressive when your lowest growing segment is still growing at 142% year over year, and they received the highest overall rating of 47 out of 5 from customers in the Gartner Peer Insights Report Voice of the Customer. Next, you can see how they're expanding. They hosted Snowflake's Cloud Analytics World Tour in partnership with AWS, Tableau, Looker, and Talend. This effort spans 3 continents and 14 cities and has attracted 7,000 registrants. Launched more than 100 hands-on workshop series events from zero to Snowflake in 90 minutes with more than 40 strategic partners, enabling more than 3,000 registrants to move analytic workloads to Snowflake in 90 minutes or less. Now you can pause the video anytime and look at any of these bullet points. There's a lot that I skipped, but overall this just gives you a general idea of how successful and how incredible this company really is. Now let's go ahead and go back to my email that I wrote, and I just wrote down some of the main bullet points, and I think you have to really look at if you're interested in buying the stock or if you're just wanting to look in on the hype. Me, for sure, I won't be buying the stock because I'm a dividend investor, as you know from these charts. That's not what I'm interested in. That's not what I'm focused on, but I'm definitely going to be watching this go down because I think it is very intriguing and very fun to watch these hyped up growth stocks. So Snowflake will be going under the ticker symbol SNOW, and we have to remember that if you're wanting to buy the stock, you're already buying it at a 30 billion plus valuation. 30 billion plus. Now, not to mention when this goes public, there is a very good chance, I don't want to speak out of term here, but there's a very good chance that the stock will probably be going sky high. People are going to be so hyped up about it, they're going to be buying it at any price. This could IPO at $200 a share, and people are still going to be buying it like crazy. So if you're going to buy it, just know that if you're wanting to hold it for the long term, you might be buying it for a pretty steep valuation, and who knows what it will look like in the long run. Incredible growth year over year, well into the triple digits. When a company goes public and they have incredible revenue numbers, regardless of how big or small the losses are, I want to give you a reminder. Remember this company called Beyond Meat? They had to raise their pre-IPO price significantly, just like Snowflake, and I think they actually raised it more than this because I believe they wanted to originally go public at $25 a share and then ended up going to like 50 or 60. And then they went up to almost $300 a share, $234. You can see the closing peak here. And so even though this company was at an incredibly high valuation, it kept on going higher and higher. There's nothing to say that that can't happen with Snowflake, but just because they have the type of revenue growth that this Beyond Meat stock did, well into the triple digits, this could very well happen to Snowflake as well. Now, the good news is, one of the things that I really like about this company, as far as not as a trade, but as an investment, as in holding the stock for months and months or years and years and years out. They are in a long-term high growth category. The cloud space has plenty of room for tons of different competitors out there. A lot of people think that it's just going to be Microsoft Azure, or it's just going to be AWS. There's room for everybody. This is a long-term growth category with thousands of different competitors, and it's just going to continue to keep growing and continue to get more competitors, and I don't think that this is going to be stopping anytime soon. So the industry that they're in is a very hyped up growth category, and a lot of these cloud stocks continue to have incredible revenue growth numbers, and that's why you see people like Microsoft and Amazon have incredible share prices over the last 5 years, as you can see. Next, we have this company will probably be a long-term success, but short-term prices can go anywhere, and that goes hand in hand with the bottom one that I wrote. Expect the stock to have extreme volatility. Now, regardless of whether or not you're wanting to buy Snowflake stock now or later or a couple weeks from now, if you're wanting to buy this stock, just know going into it that the type of volatility and share price movements that this company is going to have is going to be drastic. It's going to be incredible. This company on IPO date, if I were a betting man, I'm not a financial advisor, I don't know the answer, but if I were to guess, this is probably going to have at least in the double-digit moves, either upside or downside, probably to the upside. If this stock on IPO date goes up 20, 30, 40, 50, 60%, I would not be surprised, even in the slightest, and then who knows, the next day it might be down 25%. The way that these companies work that are so hyped up with brand new IPOs, you just never really know where the stock price is going to go. It's kind of almost like a Tesla in the sense that people get so excited about it that they take the stock in a year from $48 a share up to $438 a share. So like 10 times the share price. And just the other day, this was a $500 stock. And in just a matter of a couple days, the stock went from $500 a share all the way down to $330. So a significant downturn. So who knows if that's going to happen with Snowflake, but regardless, you can expect some extreme volatility. So just know that going in if you're wanting to invest in the stock. But overall, guys, that pretty much wraps it up for Snowflake. I just wanted to go over some quick pieces of news, just announce this real quick. Store Capital did just raise their dividend to 36 cents a share, up from 35. That is a 2.9% increase, and that is really great to see some of my stocks increasing their dividends even throughout recessions. As we're going through these hard times, they continue to raise dividends pretty much no matter what, and Store Capital currently makes up 3% of my portfolio, and I'm very bullish on it for the long term. Next up, we have Carnival down 3% already today in pre-market after they're filing to sell up to $1 billion worth of its shares that it has already issued, and issuing more common stock is just another bad sign for existing shareholders, and I'm sure that might even take the share price down even more. I did just make a video about Carnival Cruise Line, so not the best news there if you're a Carnival Cruise Line shareholder. So next up, and last but not least, we have 3M raising their guidance. 3M is one of my largest positions. It currently makes up about 5% of my portfolio. As you can see it right here, we're up pretty good on it, and they did just raise their revenue estimates for Q3 of 2020. You can see that they went up 2% year over year, up to $2.7 billion, led by a 23% rise in healthcare, and they raised those estimates from $8.2 billion to $8.3 billion versus an $8.11 billion consensus, and that makes it up 1.3% already in pre-market, and that is just more good news for one of the companies that I own. But overall, guys, that pretty much wraps it up. Like I said, if you want to support the channel, if you want to support me, one of the ways that you can do that is go ahead and use this link in the description like I mentioned. There's other things in the description as well, so go ahead and check that out. We now have 31 people signed up. So thank you guys so much for signing up, and please get that number to 32 if you're watching. Link in the description. If you want to see what I invest in, if you want to leave me any comments, go ahead and leave them down below. This shared portfolio is in the description as well. And we're about to move that $1,000 in cash right to this portfolio balance. So thank you guys so much for watching. I'll see you guys next time.